Hello, welcome to this video by Indicator Vault. In this video, we're going to go over just some confluences that you can pair together with the Supply Demand Pro and the Easy Wolfe Wave indicators that we have for TradingView. And I'm going to go into the replay function here a lot and just showing some setups, showing how to use these together, and it's actually pretty simple. The Wolfe Wave indicator is mostly going to give you the direction. So for instance, we have this bearish one, and so we're looking for, obviously down movement. And then there's a couple different ways to incorporate the Supply Demand Pro into that. So let's just start with this example. I've got the Australian dollar, Japanese yen daily chart here. And as you can see, right as this candle, this down candle forms, we now have this bearish Wolfe wave. And so as I play it out some, you're going to then see the Supply Demand Pro right here pick up this supply zone. And so this is going to be the first way that we're going to use this, is right near the peak of the pattern, the Wolfe Wave pattern. We're going to look for supply zones to form. So, as expected, the bearish pattern forms. We see a little bit of a down movement, and typically we're going to expect some kind of retracement. And as that retracement is happening, very often you'll see the Supply Demand Pro pick up a supply zone, and in this instance, in a bearish example, supply zone, in a bullish example, a demand zone. Now typically for like harmonic patterns or Wolfe Wave patterns, you're going to expect that the high, so I'll put that here, is going to hold. Now, many times you'll see the supply zone form, though, with a little bit of wiggle room above. And that's actually very helpful in some ways, where if you want a more conservative stop loss, you can put it above the supply zone instead of just right at the high of the pattern. And we'll go over an example in a little bit where that will actually have saved you for a trade. Instead of having too tight of a stop loss, just above the pattern. And of course, typically they will work out where that high will not get violated, but sometimes we can still see price poke above it before continuing in the intended direction. So as I play it out some more, we can see the bearishness, come into play just as expected. And so a great entry, way is, in this example, when you see, I believe it was this green candle here, was right when the supply zone formed for us. And so you can enter on that very next candle with your stop above here. So just hypothetically, for a short, we enter at that open, stop right above there. Of course, this is a daily chart, so the pips is going to be a little bit bigger than a day trade. This is going to be a swing trade type of trade. And if we take our first parcels at about where that trend line hits, we're looking still at over 3 R&R, which is a great trade. But we can still expect some more bearishness there. And so holding to the 50% mark of that last leg up, it's going to give over 4. But let's see how far this actually goes. And so easy 3 R&R, 4 R&R, and then holding for the full take profit of taking out that last low is this incredible 9.1 R&R. So this played out beautifully just with these simple confirmations. Get the direction with the Wolfe Wave pattern, wait for a little bit of retracement into the supply zone, and then boom. Strong bearishness continues. And now this is also why we do take partials, because I believe as we play it out even more, once it takes this low of the Wolfe Wave pattern, once it basically completes that low, we hit the demand zone, and now we're going to see bullishness continue. And so you do want to learn, what your risk management is going to be like as far as where you'll take partials, and what risk percentage, or where you may want to move your stop loss into break even, because after it takes this, you're going to be losing a lot of profits if you're not fully out of the trade here, or at least taking partials and moving your stop loss up. All right, now in this example, we've got the Euro US dollar 15-minute chart, and this is kind of the second way of incorporating this. So here we have a bullish pattern, but we're not looking at a fresh demand zone to form here, although we will see that in a minute. But the pattern is forming in an already demand zone. So if you remember in the previous example, the bearish pattern formed, but it did not form in a supply zone already existing. We had to wait for the supply zone to form and then retrace into it. But here, you can see with this down candle, the bullish Wolfe Wave pattern has completed, and then already a reaction. And so this is kind of the second way of incorporating it, where the pattern completes in an already existing supplier demand zone. So here we'll play this out and just sort of dissect and analyze the price movement here. Now here we can see now we have a fresh demand zone. So you could, after the bullish pattern forms in the demand zone, you could have entered on this very next candle, and you would have seen it would have instantly gone into profit, going to this trend line as far as the first take profit easily gets there. Let's look at where their halfway mark is. Yep. And basically lines up right as that 50% mark of the full leg. We wouldn't have really taken this leg because this is way too small here. We're not really looking at that. There are some patterns that form where this is larger and you would have maybe taken this. But looking at the full pattern, we're just looking for confluences as far as partials. And we can see that trend line for the first take profit lining up great with the 50% of that leg. But now we have basically, in the previous example, the bearish example, we have this setting up now. And so we still have this up here. Even if you don't want to wait for this high to be taken, you can wait for maybe this supply zone to be touched. So we're going to see some consolidation come into play, but that's all right. We still have some valid reasons and valid price levels that we think price is going to reach to with this bullish Wolfe Wave. And boom, we actually do see it here. So some consolidation, price finally reaches the supply zone, comes back down into an untouched demand zone. Some great rejection. So you could have gotten in here, maybe a conservative entry. Again, the first one would have been just to enter right at this candle. Goes to first take profit. Would have had to sit through some consolidation, and then boom, touches the low of the supply zone. Not quite taking out this high yet though. put a, there we go. So now you could remember this demand zone was here. Price came into here because it had not been touched yet. It was a fresh zone. We still have reason to believe we could see some upside. So it moves up and retraces, and the upside target would have been to finally take out this high and complete the bullish Wolfe Wave pattern, and we see it finally does that. All right, and finally want to get to the Euro Japanese 5-minute chart, Japanese yen 5-minute chart. And if you remember me saying about how the supply and demand zones can help give a little wiggle room for stop losses. And so in this example, we see the the bearish pattern form, moves down, a little bit of retracement, doesn't quite come to the supply zone yet. But then here we see it hits the supply zone. Now we're going to see it poke above here, just barely. You see I've got the yellow line marked out on where that high is. Now, if you can look, you will also notice how that high lines up perfectly with the 50% mark of the supply zone. See the 0.5 right where that yellow line is? And you'll notice these supply and demand zones, the most sensitive price level is going to be the halfway point of the zones. So it's not going to be uncommon that you'll see price reach to the equilibrium of the zone first before moving. And obviously, coincidentally, that high is right there. So that's where these zones come into play in a different way of not just where to enter, but if you're finding a zone right near the top or the bottom of these patterns, they can help know where to set your stop loss, and so it'll give you a little bit of wiggle room, because we're about to see here this plays out beautifully. Right here, you see that wick just pokes above it. That would have stopped you out, especially with your spread, and then boom, it starts falling quite quickly. And so this would have been a great trade. There we go, takes out that low there. And so this would have been a great trade that would have stopped you out if you had put your stop loss above the Wolfe Wave pattern high. But instead, the supply zone marked out a little bit of wiggle room for us, so that we would not have gotten stopped out here. We traced into the supply zone, if you remember that was here, and then just totally tanked. So I hope this video was helpful. It's just a few ways, to filter out trades and price action with the Supply Demand Pro and the Easy Wolfe Wave indicators with Indicator Vault. So until next time, best of luck trading.